Today, Circle's Jeremy Allaire addresses the company's filing for an IPO. The SEC reveals new information tied to that security incident on X. And Kit Addleman, a former SEC regional director, explains why the agency might have changed its tune on spot Bitcoin ETFs. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices in the green this morning. As of noon Eastern, Bitcoin rose more than 1.5%, trading above $43,000. Ether climbed nearly 2%, moving closer to the $2,600 mark, and Solana rose more than 2.5%, trading around $97. Okay, let's get to the top stories. Circle filed for an initial public offering a little more than 1 year after terminating its deal to go public via a special purpose acquisition company. The issuer of the USDC stablecoin announced on Thursday that it confidentially filed paperwork with the SEC for an IPO. In a news release, Circle said the public listing is expected to take place after the regulator finishes its review process, subject to market and other conditions. Speaking with CNBC from the World Economic Forum in Davos yesterday, Circle's CEO Jeremy Allaire was asked about the timing of that IPO, which was filed on the first day spot Bitcoin ETFs started trading in the US.
I can't comment at all about any kind of regulatory filings. I can simply say that we've been very clear that we intend to build a trusted, transparent, well-regulated company, and eventually becoming a public company is part of that. There's progress being made in Congress. There's progress being made in terms of the courts looking at the law, and there's progress being made from regulators in every major market in the world. You're seeing progress on stablecoin legislation. Stablecoin laws are going to be on the books in almost every major global financial market in 2024. And so that's a backdrop for growth. And we're excited to be able to continue to invest into that.
Allaire also said he thinks there is a, quote, very good chance that U.S. lawmakers approve stablecoin regulation this year, adding that he thinks there's a, quote, very strong desire to act, especially as other governments around the world are regulating dollar digital currencies before the United States. Next, Tether is pushing back on a report from the United Nations that the USDT stablecoin is popular among money launderers. The UN's report on the growing threat of casinos, money laundering, and underground banking in East and Southeast Asia pointed to Tether as a popular means to move funds. The report said online gambling platforms, and especially those that are operating illegally, have emerged as among the most popular vehicles for cryptocurrency-based money launderers, particularly those using Tether or USDT on the Tron blockchain. The UN pointed to the stablecoin and blockchain as a preferred option for money launderers due to ease, anonymity, and low fees. In a press release on Monday, Tether said it was disappointed in the UN's singling out of USDT to highlight its involvement in illicit activity, while ignoring the stablecoin's role in helping developing economies. Tether went on to say that its tokens make it possible to meticulously track every transaction to protect its community. Last, the SEC has given an update on the security incident that allowed a fake post on X prematurely announcing the approval of spot Bitcoin ETFs. On Friday, 3 days after the incident, the SEC put out a statement saying the unauthorized party responsible for posting the fake Bitcoin ETF approval gained access to the agency's X account by getting control of the phone number associated with the account. The statement went on to note that there is currently no evidence that an unauthorized party gained access to the agency's systems, data, devices, or other social media accounts, and that it asked X to help cut off unauthorized users' access. The SEC went on to say that staff members are still assessing the impacts of the incident on investors and the marketplace and will continue to assess whether additional remedial measures are warranted. The agency noted that it has been coordinating with law enforcement, including the FBI. And speaking of the SEC, the agency is willing to postpone its civil trial against Terraform Labs and its co-founder Do Kwon for allegedly orchestrating a $40 billion crypto fraud. The reasoning for the delay, the SEC agreed to wait for Do Kwon to be extradited to the US from Montenegro, where he's currently being held. In a Monday court filing, the SEC said a, quote, modest adjournment of the trial initially scheduled for later this month was justified based on statements from Kwon's lawyers that he wanted to attend, agreed to extradition to the US, and could be in the United States as soon as mid-March. All right, for our main story, after that landmark approval of spot Bitcoin ETFs last week, I spoke to Kit Addleman of Haynes Boone. She's the former director of the SEC's Atlanta regional office with more than 2 decades of experience in senior management positions with the agency. Asked her why she thinks the agency changed its tune on these Bitcoin ETFs. Kit, you are former SEC. I have to ask for your reaction to this decision by the agency to approve these spot Bitcoin ETFs, especially after years of denials. What's your reaction?
So my reaction to the approval was one of delight, right? The SEC sort of finally found the light after being admonished by the courts that it needed to take action and justify any denial if actually that were the way that it were going. Aside from that, I was surprised to see the varying degree of the dissents, and even where there is a concurrence, a specific statement around not liking the way that the commission was approving or approaching the ETFs, or more appropriately, the ETPs.
Yeah, I think that there was a sort of tension behind the scenes with the SEC's approval here. And I'm wondering what you think pushed the agency to give in and finally approve these ETFs. I mean, obviously, there's the Grayscale court decision last August, but there's no doubt that that was a major factor here. But at the same time, we had a bunch of major financial institutions pushing for these ETFs. What do you think was the motivating factor?
I think really the motivating factor is the scrutiny around the court decision. The SEC received several letters from congressional members, both senators and representatives, pushing for the approval of the ETF. The SEC never likes undue scrutiny from Congress that controls its budget. So certainly that is a big factor. The insertion of larger players, including BlackRock, for example, into a potential ETP market, now an actual ETP market, also brought some additional pressure to the SEC to approve the kind of product that we're talking about now.
I want to talk about Gary Gensler because he's been pretty clear that he's very skeptical about much of the crypto space. He's made it clear, even in the announcement of this approval, that it was not an endorsement of Bitcoin or other cryptocurrencies, and that the asset class, in his opinion, was still fraught with risks. How do you sort of square the chair of the SEC being anti-crypto in some cases with this decision to approve them anyway? Do you think that there's a growing tension at the SEC between having to acknowledge interest in this asset class or Wall Street's interest in this asset class, and the fact that they still have pretty big concerns?
Well, I would say, again, it's the pressure from outside sources that made them go in this direction. But my own feeling about the way that the SEC should be approaching these kinds of products, whether it's cryptocurrency or something else, is the commission doesn't have to like the product, right? So long as there is sufficient disclosure to investors, there are ways to monitor it. Those are the telling points around the approval of any initial public offering, for example. They may not like the fact that this is a oil producing company, right? Carbon emissions way off the scale, whatever the issue is. Just because the SEC doesn't believe that investors should invest in that particular product, if there is full and fair disclosure, it should still be approved through the Division of Corporation Finance and by the commission. So I think they have to come around to, we as investors are all big boys and girls and have the right to consider products that individual commissioners may disagree with or not think are a good idea, but they don't get to make those decisions for us individually.
Do you think that this decision makes it easier to approve other spot crypto ETFs in the future? I mean, investors are already turning their attention to potential spot Ethereum ETFs, and Gensler has refused in the past to give a clear position on Ethereum and its sort of classification as a security versus a commodity. Do you think that now that the Band-Aid's been ripped off, so to speak, will it be easier to approve potential other investment vehicles like this?
Absolutely. The commission does have to rely a lot on its precedent. And specifically, that's the reason that Commissioner Crenshaw dissented, or one of the reasons that she dissented was the idea that this is opening the door to something else with respect to other altcoins or other types of products.
I want to ask you more broadly about the SEC and crypto regulation beyond just the ETF news. What do you make of the regulatory environment that the SEC is faced with right now in regards to crypto? The agency's argument is, of course, that existing securities laws are enough to regulate the industry at large. Has that borne out, in your opinion? Does the agency need legislative support here from Congress, or does the industry need lawmakers to step in and sort of delegate what other agencies might be involved?
So my personal opinion, Jordan, is that the SEC should obtain and that Congress should approve specific rulemaking related to cryptocurrency. It is a different asset class. It should have its own rules. We shouldn't be taking things that were created 100 years ago, nearly 100 years ago, with respect to a stock market that is completely different from what it is today, and investments that are different from what it is today. Congress has not taken up that challenge yet. I know there was some infighting early on in the crypto market around whether it should be the CFTC that would have authority in that area, and the SEC has stepped out and tried to make this an area of their particular concern and oversight. But I think there is need for more rulemaking, more legislation, and then rulemaking would be ideal, right? If Congress set up an actual provision under the securities laws or commodity laws with respect to cryptocurrency.
All right, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.